Hello, folks. Welcome to our channel. Today, we would attempt to describe what we do here at the Spy Scalpers. Although we called ourselves the Spy Scalpers, but we do other trades beyond just scalping the spy. And I'll try to cover as best as possible what we do beyond scalping the spy. When you log in to our channel, you're going to live uh, see this dashboard, which simply it's the spy chart for I think the last 5 days. And to the far right of it is the market structure, which I am going to cover in a minute. Then below the chart for the SPY movement, it's the index ETFs. Then below that are the big movers, and I will also explain soon what we consider the big movers. So we have two major trades that we do here. The first is trade to SPY, and the second is trade other indicators that meet our trading criteria. But before I go ahead, I would like to caveat to say that this is solely for entertainment purposes. We are the SPY Scalpers here are not professional traders, and we do not intend or attempt to make recommendations of trades or how to trade for you. Whatever trades you take based on our indicators or what you see on our channel is solely based at your own, solely at your own discretion and at your own risk. We have no obligations, so we take no responsibilities for whatever decisions you make with your money. That is to you and you alone, and it's for you to bear. We are simply showing here what we do for fun. And we hope you join us in the fun or do what else you decide to do at your own risk management level. So with that out of the way, I would go ahead and show you, starting with the market structure. What we are doing here overall is just capturing trade following the four main phases of the market, because market tends to move in four major group phases. The first is in accumulation, when there are buyers trying to position themselves for an upward pop, which is the acceleration phase. And the distribution phase is when there are sellers trying to position themselves for a sellout, which is the deceleration and the declining phase. So we want to go into a trade mostly during accumulation phase or acceleration phase when we are bullish, or mostly during the distribution phase or the deceleration phase if we are bearish or short the market, and long the market is for the other one, which is for a bullish trade. So basically, we have coded the market structure into different strategies here. When we are bullish, we are trading between accumulation and acceleration. And when we are bearish, we are trading between distribution and deceleration. I will show you soon how we attempt to do that for different time frames. And beneath the market structure, what you see is the SPY chart, which you can also use to do any other trade yourself by putting your own ticker indicator here. It's trying to see how far for that particular time frame as the indicator ran, so that we'll know when to go into a trade or exit a trade. The top red line is actually 3 standard deviation from the mean, which is the middle cyan line, which is 0 standard deviation. So if we see trades that are already scratching the 3 standard deviation, we try to be very cautious, because we know it's only about 5% of the time that trades will be in that position. We want to go in at the buy zone, which is where which is simply between 1 and -1 standard deviation. So let me leave this screen right now and show you how this is the SPY scalping strategy, which is foremost number one strategy. So what you are actually just waiting for or looking for is the big arrows, the signals. So if I see, I check my screen when I have the time, and I see an arrow showing which is of this size and it's green, that simply means that the SPY is about to go on a bullish run. So what we do is, in that case, we simply buy an at the money call, waiting for a pop-up. So let's assume this day, like you can see here, SPY was 415.82 when the arrow came into our screen. We simply buy a 416 call for SPY weekly. And I can show you quickly, let's assume that we had, say it is Monday morning, and we got our indicator and SPY was 426, and we want to go bullish. We just come and we buy the 427 call at 2.25, simple. And that's it. Either capture the gains or wait for it to run or scale out. But sometimes most times really, we try to put a stop loss as well, just in case the market trades in our opposite direction. And because nothing in the market is 100% guaranteed. But like you can see, most times that we have had this arrow in the last few 10 days trading window, it's always been in accordance with our plan. Here, going to SPY at 415, we hesitated before the end of the day at 421. Contrast related to your trade size. The same thing here, 419. By the end of the day for that day was 423. Same thing here, about 424. I think at the end of that movement, we didn't wait for the end of that day. As soon as we had our exit sign here, 425, we were out. So there are days when you don't see the upward arrow, you also see the downward arrow, which means that you should buy the money puts for SPY as well. 417 here, you exited somewhere here when the arrow changed. So that is the very first strategy. You look for the big arrow. It shows that you should either go in whatever direction you buy at the money call or at the money puts. But sometimes you can see, like in the last 10 or 15 days that we have here, we have only had that signal 1, 2, 3, 4 times. So it doesn't happen every day. It doesn't meet our indicators every day. There are times when it doesn't. But most times what we have these smaller arrows that doesn't meet 100% of our indicators, but it also fulfills some of that criteria. And we actually, in that case, either don't take trades depending on our trade appetite, or do half or 1/3 position. Like in this case, this was a 1/3 position, the quick pop, and you are out. 1/3 position, quick pop, and you are out. There are few days, 1/3 position again, or half position, quick pop, and you are out. You don't have a very good run for those small arrows, but there are also scalping opportunities as well. Yeah, is it only intraday? No, although we created a strategy for intraday, but then once you are in a trade management comes into play, right? You decide when you exit or if you are going to stay in the trade. Some people are in this trade for a 5% gain. Some people want to ride it to 300%. Like if you had gone in here for 415 and you waited 3 days later, it is 425. That's a $10 move for SPY. Do I recommend that? Again, it is solely at your own discretion. All you have to do is wait for the indicator to show up. If you are watching the screen, we are working towards the ability to be able to send alerts out to subscribers, so that once this indicator comes into the screen, you get a ding on your phone rather than be looking. But right now, what we have is you're looking at the screen for sure, and you find the indicator and you trade it depending on the direction of the trade. That's the first set of our trade. And you also see one thing I did not mention here that I should quickly capture is that we have placed a line here that tells you when a trade is good. If an indicator comes in and I see that the volume is above this line, I really do think that it's something that you should go in. We actually use this mainly for the smaller candles as just a criteria for a second check. If there is volume, that shows that it is just a high likelihood that it's going to be a good trade. And there are times when we see those smaller arrows and the volume is below our red line and we don't take those trades. The trade relative to volume, these things are sorted by volume, assuming that we want to trade the IWM, not this or the SPY. Even if there is no signal at the top of the SPY, you want to trade any of the ETFs. You come in here below, you ask yourself the question, what does the market say about the SPY for that day? If the MA is stacked, that simply means that all the short MAs are ahead of the long MAs. That means that the 8 moving average is ahead of, like, say, the 50-day moving average, for example. ADX is simply telling you the directional strength, relative strength of the particular stock for that day. Green means it is moving strongly in the upward direction. Red means it is moving strongly in the downward direction. So that means that if I want to trade puts, I am looking for something that is trending down significantly. If I want to trade a call for an option, I'm looking at something that's trending down significantly. It's trending up significantly. So we are pretty much trading the colors. So for this day in particular, for an intraday trader, you always have to make sure that the daily is your control. If the daily is green, the first thing you check is, where is the daily green? Here, daily is green for SPY. Then I check it down to the 5 minutes. It's not all green, so I will be cautious and just watch SPY. At some point, once SPY starts changing to accumulation at the sub-daily, when I say sub-daily, I mean lower than daily time frame, and the MA is still stuck, it is something to consider a directional trade for SPY. I can't find anyone right now. Yeah, I think this one actually meets that criteria, which is what ACWI. ACWI daily green. Every other sub-daily was green. If I were to trade ACWI for that particular day, I would simply buy an add money call for ACWI and I'll watch it run. Yeah, it's pretty that straightforward. It's really straightforward. PFF would have been a very good one because PFF has ADX green, which means that the upward directional movement of ADX is very strong. But look at what is going on here. ADX is in deceleration for the whole time frame, including the day. I'll stay out of ADX. So those are the things that you look quickly, just watching it by eyeballing, you are able to make a quick decision of what trade to take and what trade not to take. Do you only do intraday trade based on this? No, because you can actually do a swing trade. For the swing trades, you are looking at the 4-hour time frame to the 1 month time frame, using the 1 month as your control. So, recall for the intraday trade, we're using the 1 day as our control. Then for the swing trade, we'll be using the 1 month as our control. Like in this case now, SPY would be a very good swing trade because the 1 month is green, up to the 4 hours is green. So I'm going to ignore the 1 hour to the 5 minutes because I'm a swing trader. I'm going to be looking at the 1 month as the control to the 4 hours. Everything is green, and the MA is stacked. The average volume is strong relative to the last 60 days. And so you buy things that meet your swing trade criteria. That's really what we do with this. This is strictly for the ETFs. Big movers, like we have said earlier, are simply the stocks that we consider on the daily average does a lot of volume and also a significant movement. And we have overlaid our strategy on it, and we trade them daily as well. We just look for the colors that meet our trading philosophy and criteria. Like in this case, if we were trading for this day, UNH looked like a very good intraday trade, but we wouldn't do UNH as a swing trade because the 1 month is red. And if I go down the list quickly, let's see, EL, very good intraday trade and also a very good swing trade, but ES might be not moving rapidly because the ADS is not strong. But look at the ADS for DocuSign. DocuSign is 41, strongly green. Everything is green up to the daily. A little bit careful because the daily is in deceleration, but you have just to watch. Once the daily starts getting green, this is something to really watch it. Significantly, DocuSign might be in a very good run. So that's really what we do overall. But how do we gauge entry and exits depending on our appetite for trading? I'd like to always use the next change versus the average true range. If something has moved significantly beyond the average true range, like I have shown in the chart earlier on for the standard deviation, I'm a little cautious. Like in this case right now, EL has moved 5.95 compared to his daily average of 5.1. It's a little stretched. I have to be very, very careful in trading EL. Again, if something is moving in the upward direction here in this chart, and the net change is crimson red, I'm a little also cautious. So those are what all those things are for. And we also have the IV percentile also coded here that shows the relative cheapness of the option contract if you want to trade the option for these stocks, which is really what we do. Once we start seeing IV percentile of greater than 50, we don't want to be in a directional trade. We want to edge our trade either by doing a spread or not even doing it at all. So those are the things that we do here.